Are you looking for a tax-efficient way to support your favorite charities by using money from your retirement accounts? Then today's video is perfect for you. My name is Mike Heatwall, and I am the founder and CEO of the Dollar Group, a wealth management firm focused on helping retirees. In this video, we will discuss a fantastic way to give to charity from your retirement accounts. The strategy is called a Qualified Charitable Distribution, or QCD for short. First things first, what is a qualified charitable distribution? A QCD is a direct transfer of funds from your IRA payable to a qualified charity. This can be an incredibly tax-efficient way to donate for those over the age of 70 and a half. So why should you consider a QCD? Let's break down the benefits. Benefit number one, QCDs count toward your required minimum distributions, or RMDs, for the year. Once you reach age 73, you have to start taking RMDs from your traditional IRA. A QCD can help satisfy this requirement. For instance, if your RMD is $20,000 this year and you give $5,000 to a charity from your IRA, you are only required to take out an additional $15,000 to satisfy your RMD. Of course, you can always choose to give the entire RMD amount to a charity as well, up to a limit of $100,000 annually per individual. Benefit 2. QCDs can reduce your taxable income. Normally, a withdrawal from your IRA will result in the full amount counting towards your taxable income. In the case of a QCD, because the funds go directly from your IRA to the charity, they're not included in your adjusted gross income. This can be particularly advantageous if you are looking to minimize the impact of your RMDs on your tax return. Lowering your taxable income can help you avoid tax issues, such as being pushed into higher tax brackets, paying higher Medicare premiums due to your income being too high, also known as IRMAA, higher taxation of Social Security benefits, state income tax, depending on your state of residence, and net investment income tax. If you've experienced any of these side effects of higher income, you know how painful these items can be. Benefit number 3. You get a tax benefit from giving even if you are not itemizing your deductions. Most of our clients use the standard deduction these days, so they typically don't receive a tax benefit when giving to charity. Using this strategy, we can give to charity using our pre-tax funds from an IRA without having to report this as taxable income, which means we can use the standard deduction and still receive tax benefits from giving. Benefit number 4. You maximize the impact of your donation. By donating directly from your IRA, the charity receives the full amount versus the after-tax amount, and you can support the causes you care about without the tax burden. This means your donation goes further, supporting the programs and initiatives important to you. Let's look at an example to understand how this works. Laura is a widow who is required to take a $40,000 required minimum distribution from her IRA. She does not need the money to cover expenses and wants to give it to a local charity. Her first option would be to take a withdrawal of $40,000, pay taxes on the distribution, and then give the remaining money to charity. Her second option is to utilize the QCD strategy by having a $40,000 check cut from her IRA to the charity of her choice. Let me walk you through both options in more detail. Okay, so let's dive into this. So Laura has the two main options. She wants to give $40,000 to charity from her IRA, and we're trying to determine which option makes more sense for her. So with option 1, you can see that she will pay a total tax and increased Medicare premium of $27,566, and the charity will only receive $30,400. With option 2, by giving it through a QCD, the total tax and increased Medicare premium will be $15,612, whereas the charity will receive the full $40,000. So let me show you a little bit more detail in terms of how we came up with these numbers. So if we started up at option 1 with the RMD coming out and then paying the charity after taxes are paid, here's what that looks like. We start with $110,000 for her adjusted gross income before the withdrawal. Once we add in the $40,000 for the withdrawal, you can see we now have a $150,000 for adjusted gross income. If we use the standard deduction for an individual, we're looking at $16,550, which leaves us with a taxable income of $133,450. By calculating the tax due on that, we're left with $25,070. In addition, she'll have IRMA Medicare premiums of $2,496 because her taxable income is too high. So when we add those two together, that's where the $27,566 comes from. And then since she's in the 24% tax bracket for federal, you can see we've got $30,400 left of the $40,000 after that tax has been paid. Whereas with option 2, the adjusted gross income is not affected by the $40,000 required minimum distribution since it's given directly to charity. Therefore, after we take off the standard deduction, we're left with a taxable income of $93,450. That leaves us with a tax due of $15,612 and no additional Medicare premiums. And so the $15,612 is all that we're paying in tax and increased Medicare premiums, and the charity receives the full $40,000. So, what steps are needed to complete a QCD? You typically have two main options available to complete a QCD. Your first option is to contact the investment company where your brokerage account is held and ask for the required QCD form. This form will be completed each time you want to give to charity from your IRA. The check will be made out to the charity, mailed to your address of record, and then you deliver the check to the charity. Your second option is to add a checkbook to your IRA account. This will allow you to write checks at any time to any charity you choose. The one caveat to this approach is that you will need to ensure you have enough cash in your IRA to cover the check amount. If you are working with a firm that is managing your IRA accounts for you, ensure they know how much you plan to give so they can track the cash position. How do I report the QCD on my tax return? This is the trickiest part of the QCD. Currently, the investment institutions do not track QCDs for you at the end of the year. They send you a 1099-R form, which shows the total distributions from the IRA. For our clients at the Dollar Group, our team sends a tax letter in January detailing the total QCDs they made throughout the year, so they don't have to track this themselves. This is not a standard practice for most firms, so if your advisor does not do this for you, you will need to keep track of this yourself. So, now that we discussed keeping track of the QCD amounts, let's cover how to report these on your tax return. I cannot stress how important this step is. If you don't report the QCD correctly, you will lose the taxable benefit entirely, as the IRS won't know you gave that money to charity. Okay, so let's take a look at the 1040 and how we're going to report the QCD on the tax form. So at the top of the 1040, you've got your personal information that you'll have filled out. You'll fill out the rest of your income information on lines 1 through 3. And then on 4, you'll see the IRA distributions is on 4A. So from our example, we had a $40,000 QCD that we did, which was the distribution. And then on 4B, you'll see the taxable amount of $0. This represents how much is taxable, which is, in this case, 0 since we gave the whole thing to charity. Now next to 4B, you're going to want to write QCD on here so that the IRS understands why you have a $40,000 IRA distribution but a $0 taxable amount. So, let's recap. By making a qualified charitable distribution, you, number 1, satisfy your required minimum distributions. Number 2, reduce your taxable income. Number 3, maximize the impact of your donation. It's a smart way to give back and make the most of your financial resources when you are over age 70 and a half. Just remember, QCDs must come from your IRA and go directly to a qualified charity to count. If you found this information helpful, please give us a thumbs up and don't forget to subscribe for more financial insights. Thanks for watching, and we'll see you next time.